You're now watching the halftime report. That was just video of the president at the White House taking questions after a report crossed that's saying that Trump will likely fire Fed Chair Jerome Powell, quote unquote, soon, according to a White House official. The president now saying that is highly unlikely. Just some wild swings when it came to the reporting. Again, Megan Kinsella, thank you very much. Again, you are watching the halftime report. Let's get to our investment committee. Joining us for this hour, we have Joe Terranova, Steve Weiss, and Sarat Sethi. I want to show you a chart right here. Markets are well off their lows now after hearing from the president, but you kind of see the chart of the S&P right there. Took a bit of a dip and now recovered. Right now, taking a look at the state of affairs, the Dow up fractionally right now. That's the chart I was telling you about. The S&P down fractionally. Similar story for the NASDAQ, just very slightly in the red, but some pretty sharp moves after those reports came out again that the president was likely to fire Jerome Powell soon, according to a White House official. Now the president is saying that is highly unlikely. Joe Terranova, I want to come over to you. One of the things that you were watching was the dollar chart. A lot of movement in the dollar. The dollar also rebounding. But walk us through what you think the dollar chart was signaling, or dollar investors or currency investors were saying in response to these reports.
If the president were to fire the Federal Reserve Chairman, the two trouble spots that you would look towards would be, number one, the U.S. dollar, as we show that chart. It would resume the decline that we've seen so far year to date, down 9%. Then the other trouble spot would be in the long end of the curve. You watch the 30-year. 30-year spiked up to 5.07 during the news that potentially he was going to fire him. 515 is the high over the last 52 weeks. Those would be the two trouble spots. However, I will say this. I have said this over the last 4 weeks consistently. September 17th, my expectation is that the Federal Reserve will cut interest rates. The president doesn't have to do this. He's going to get what he wants. On September 17th, in the congressional testimony, Chairman Powell identified 2 months worth of inflation data that was important to him. We've got 1 month already. It's not showing up to the degree of which would require him not to cut rates. September 17th, I believe they will.
Let's talk us through this thesis for a second, Joe, and I want to get to Sarat and Weiss in just a second. So you're saying in the July meeting, there's a dovish tone that leads us to that cut coming in September?
I don't know.
Well, just in all fairness, the president not only does he want cuts, he wants the short-term borrowing rate to go down. That could also be achieved somewhat by some signaling from the Fed that they're on the path to cutting rates as soon as September.
They could do that signaling. I'm not sure that you're going to get that signaling because you still want the July CPI reading, which will be reported in August. I think the chairman is going to want the benefit of that data as well. But I believe after that, it is going to show that the inflation is not spiking to the degree at which the chairman feared that it would. And I think on September 17th, they will be cutting rates.
All right. Weiss, Sarat, I want to come over to you guys. We know that the White House does respond to big movements in the bond market. We've heard Treasury Secretary Bessent just mention that they are very mindful of the bond market. Looking at the 30-year, it is above 5%. It has been all day, in all fairness. Steve, I want to come to you first. Your reaction just to that move in the bond market, bond investors reacting to the possibility of Jay Powell being fired.
Look, I think it's like anything else. The market has sort of taken a wait-and-see attitude. We've heard so much come out, going one way, then quickly reversing, going the other way. We just saw it now, where White House sources are saying he's going to fire him, and then he downplays it. So to position based upon that is sort of a mistake. But, you know, let's be clear. He said that he wants to. I think that has been sacred ground. And you need the checks and balances in government, and that's one of the critical ones. So somebody who just wants to cut rates, number one, to support their tax bill, and number two, to help all their friends around the country, right, similar to what is being done with private equity, is just a mistake. And I'd correct one thing the president said. He said, I don't know how he put Powell in that position when it was Trump that put Powell in the position. So he does know. So bottom line is, I don't think it would be a good thing for the market. Hazard, you know, he's obviously smart, obviously knows his way around economics, but he's also a sycophant. So the pledge any of these people can have to make are to cut rates regardless of what the market's telling you. What Powell has done, he's made mistakes, but I think he's overall done a great job, is that you can't move too soon on these, because otherwise, if you go back the other way, you lose credibility. So it's a wait-and-see attitude But to me, it's clear that he's going to try to do something.
All right, Sarah, I want to come over to you as well. Again, markets took a dip. They've recovered for the most part, kind of pretty much where they were before this report crossed the wires. I want to talk to you just about how equity investors should respond to even just the possibility of Jay Powell being fired. And by the way, we heard from Jamie Dimon and also David Solomon sitting right here at Post 9 talking about the importance of Fed independence.
Yeah, and Steve's absolutely right. You have a checks and balances in place. So I think right now where the market is, at first, if you talk about Liberation Day and all that, it was, we got a hint something was going to happen, the market reacted. It kind of reacted, a mini reaction, but until we see some action, I don't think the market's going to do anything. But it will do something if that does happen, because I do believe the uncertainty caused by that and knowing, the unknown as to who's going to take place, what is that person going to do, how low are rates going to go, and really what does that do to the market in terms of the 10-year and the long bond, because that's where a lot of the financing really happens. That's where valuations happen for equities. So I think that's going to be where people are going to be focused on, and the Fed does not control that part. They control the short-term part, which you're not going to. The more you refinance short-term, the higher the rates are going to go long-term. So who's going to win?
Yeah,
let me just add to
will take control once again, dictating where risk asset pricing goes, and that's not a good environment.
Right. Yeah, let me just add to that. So the market could very well, if he's putting in one of the people that have pledged to cut rates, it could rally in the short term and say, great, rates are coming down. Let's party while the partying's good. And then retribution, that's the equity market. The bond market will be a different situation, as Joe points out. So you see delinking.
It seems like you're kind of spelling out what Jamie Dimon was saying on the earnings call yesterday, basically saying in short, I think that the independence of the Fed is absolutely critical.
Yep.
Playing around with the Fed can have adverse consequences, the absolute opposite of what you might be hoping for. And if you're the president who's very mindful of the equity markets, which you're talking about, the bond market kind of leading the pricing. Also very important to note, the 2-year, I believe that yield's actually lower than it was before this announcement.
And it should be. The 2-year fell to 385. That's exactly what should happen based on this news. But what's interesting about this, let's pretend that we didn't hear any of these reports this morning, and we came in and we were talking about expectation for Fed policy. Was there anything in PPI or CPI that you saw that you said to yourself, oh, wait a second, the chairman is right, and we should not be lowering rates? I don't think any of that showed up. I think
not even core ticking up to 2.9 year over year?
No, I don't think there was enough evidence. I don't think there was enough evidence not to cut rates at some point in the next 3 to 6 months.
I don't think there's enough evidence to cut rates because we've seen the date for tariffs keep getting pushed back. Yeah. So while Powell said we need to see 2 months of data, at that point, the drop dead date on agreements was supposed to have occurred. So we did see also in CPI some tick up.
In the goods, services was weak.
Right. So look, I don't think there's enough of a convincing case other than the pressure Trump's applying, which I think Powell's immune from, to cut rates right now.
I think the PPI.
The economy's doing fine.
I think the PPI
but in all
gave
fairness,
you comfort on,
I don't know if that's consensus. In fact, Morgan Stanley out with a note earlier today talking about tariffs, their baseline scenario saying in part, we continue to expect the strongest inflation push from tariffs is going to be in August. And they say that June's the end of the beginning, not the beginning of the end. They go on to talk about immigration and some other things, but they don't see any cuts this year.
Okay.
And I'm not far off their case either. I don't think that September's a slam dunk at all.
All right, Sarat, your take?
No, I mean, I do think it'll be interesting to see with the tariff issue coming in, because the Fed is going to be in a complete quandary. Prices higher, employment going, getting worse. What do you do? And then you want to ignite inflation, or how do you help the economy? So the tariff issue is this uncertain kick the can down the road. If that kind of gets resolved before the next number, then I think you could have a case to say, well, our expectations are going to be lower and employment is hard. But
it gets further complicated.
Right. I think it's going to be permanently complicated. If you talk to anybody who's an administration official or used to be, I think, a fair word for the president's mercurial. So it might be highly unlikely today. We're not quite sure what it could be tomorrow on Truth Social or maybe overnight. So why don't we move on to what we do know?
Let me just give this one final comment, which is that you could see employment come down, but still wages go up because of the scarcity, because employment's gone down, because of all the labor that's been deported or is afraid to come out of wherever they're living.
All right, with that, why don't we move on? Goldman Sachs, just speaking of, we were just talking about David Solomon. David Solomon right here at Post 9 following earnings. Shares of Goldman moving a bit lower after what a lot of people really thought was a blowout earnings report. Joe, I'm going to come over to you. Equity trading jumped 36%. Investment banking fees jumped 26%. Mike Mayo calling it just a kind of a banner report. Also believes that buybacks are coming. His price target $7.85.
So what's interesting is that the fundamentals for money center banks are very strong, and they delivered on what your expectations should have been after witnessing the extreme volatility in the quarter. Trading revenue was remarkably strong. It wasn't just Goldman Sachs. Morgan Stanley's trading revenue was up 23%. But there is, in the environment of speculative trading, a moment where you have to have an awareness about a degree of exhaustion in price action. And leading up to earnings, there was very strong price action in the money center banks. And I think what we're seeing is a reflection of good news and bad price action, where it is a blowout quarter and you're really not getting the response in price. So what do you do with that as an investor? There's several things you could do. You could cut back on your positions if you're long. You could sit back and say to yourself, okay, maybe the market's going to come to me if I've missed the trade. I don't want to step forward and do some buying right here. But I think most importantly, you just over the next several days have to really look at the way that they are going to trade these money center banks universally. JP Morgan, Morgan Stanley, Bank of America, all of them collectively, even how Wells Fargo and Citi are going to trade. You're going to see analysts, they're going to raise price targets on individual names like Goldman Sachs and Citi and Morgan Stanley. You're going to see if that gives it a lift. But I think the next several days are really critical. I think you have to be patient. I don't think you want to jump in and do any buying. And if this good news price action, it kind of intensifies and accelerates, you might have a little bit of an unfolding of a financial sector correction, which candidly is a little bit overdue.
All right, by the way, we're just showing the chart, the 3-month chart of all the banks. Basically, since that April low, big bounce ups. I believe Goldman Sachs was up about 40% since then. So a big run up. Weiss, you also own Goldman. Your view on the quarter, and also, is this maybe a spot to take profits on Goldman, especially with, perhaps a lack of clarity on where we're going to get those cuts? You say you don't even see any cuts this year.
I say it may not. I wouldn't be surprised. I'm not declaring. I have no idea what the Fed's going to do, frankly. And it doesn't matter in terms of the companies I own, including Goldman Sachs. I look at Goldman Sachs, if you look at a long-term chart, it's a long-term compounder. It's a permanent compounder. And that's what's going to continue. So we had a couple of downgrades. I think you talked about them on Monday. Last week we had one or two. It just doesn't matter. This is a cycle. Now, if we had an up market today, the stock would be doing quite well. I mean, a phenomenal quarter. If you pick apart the quarter, you can take a look at asset management and say, well, maybe that didn't grow like I would have thought it grown, and maybe the market's not going to pay for trading revenues, but that would be a mistake with Goldman, because that's one thing they do great. So Goldman Sachs is just not one of those companies that I look at day to day and say, what's going on here? I've got a lot of confidence in it.
All right, Goldman Sachs fraction lower. I want to move on to Bank of America. Shares down more than 1%. Earnings beat, revenue miss. I think the real headline here is the net interest income miss here. Sarat, you own this one. Your view on the quarter and just also the stock.
I think out of all the banks that I own, this is the one that I'm kind of thinking about what I'm going to do for the next year. I think they've kind of, everybody else, the Morgan Stanleys, JPs, have really good secular stories in there. This one's a well-diversified bank. It's done everything I wanted to do. It's up over 20% for the year, but it's kind of like a jack of all trades. And I think, net interest income, if rates do go lower, this one could get hurt more than some of the others. So I kind of have this one on my watch list.
Is this a bigger deal? Sorry to cut you off, Joe. Is it a bigger deal because it's a big consumer bank when we're talking about net interest income?
You got that. You have lending. You have, a lot of other things that if the economy kind of slows down or you see a slowdown in the business activity, this could affect them a lot more when it comes to real estate and the consumer.
Yeah, I agree. I own it as well. I mean, there's no real story to grab on. It's a nice, steady performer.
Right.
It's got great management, but it's not, you look at Goldman Sachs, say that's the Margot Robbie. You look at this and you say, it's Medea, so it's a completely different story.
Let's highlight for a second the really strong trading revenue quarter for most of these banks, and then you say to yourself, you have a couple of companies that are about to report. Thursday, Interactive Brokers. Friday, Charles Schwab. At the end of the month, you have Robinhood and Virtu Financial. I would think in each one of those 4 instances, you're going to hear really strong earnings reports, and it's based off of significant volatility and robust trading activity.
Yep.
Now, you want to watch what's the response. What's the response to price after you hear those earnings? But I think each of those stocks are in a position where you could see further appreciation. Maybe Robinhood is the one name that's a little bit rich in valuation and is somewhat extended.
All right, I just want to button up on Bank of America. Sarat, you said you don't know what to do. By the way, Brian Moynihan's coming up on the exchange later today. When you say you don't know what to do, are you thinking about maybe trimming some position?
So
or?
I would say this way. If you get a pullback in financials, I'm not going to be adding to Bank of America. What I am going to be adding is to what we like is Morgan Stanley. So, there's a Goldman Sachs, there's a Morgan Stanley. Morgan Stanley's over 2/3 of their business is wealth management. It was up 14%. They just increased their dividend 7%. It's got a solid balance sheet, reasonable multiple. So I think that's where I want to go. I think Bank of America has done very well, but the catalysts there or kind of going forward are more difficult to find than when you look at a Morgan Stanley or a Goldman Sachs.
By the way, Wolf out with a note saying that tailwinds are in place for financials to keep on with leadership. So some different points of view there. I want to go to the regionals as well. We had some regionals report. PNC, earnings revenue and beat. M&T Bank, earnings beat. These are kind of Northeast corridor banks mostly. I guess if you count Pittsburgh as Northeast corridor. I don't know if you do or you don't. I want to kind of hit this one. Joe, you own M&T. Your view on this company and also the idea, what's more attractive, money center banks, regionals at this point?
Well, first, let me just address your comment there on the financial sector overall and tell you where the investment actually is in the ETF, the JOTI ETF. It's 30% exposure to financials. It's a significant overweight, and it's been that way for the better part of the last 15 months. So, yes, I think there's a lot of positive momentum in financials. The positive momentum in the near term has been in money center banks, not regional banks. Regional banks ultimately have to prove themselves at some point. You look inside the earnings that you got today, net interest income was strong for PNC, 8% growth, a lot of commercial loan growth. That was favorable. Net charge-offs were down 24%. The expectation was that was actually going to be unchanged. For M&T, it's a little bit of a different story, which kind of frustrates you rather when you say to yourself, okay, I'm going to be universally allocating towards the regional banks because M&T net interest income actually missed. So the loan growth really isn't there. It seems to be idiosyncratic, and I don't know, other than if you told me over the next 3 months we're going to get mean reversion, money center banks relative to regionals, I could see that. But in terms of fundamental tailwinds, I still think the money center banks owns the advantage over the regionals.
When it comes to the regionals, are they also, economic growth and tariff sensitive in your mind? I mean, the idea that we don't know what the tariff picture is and the tariffs could impact a lot more of their customer base, which seem to be small and medium-sized businesses, and also directly with the consumer.
To your point, and add upon that, if we have elevated bond volatility surrounding potential if the president actually does fire Chairman Powell, you see the backup in yields, you see the dollar move lower. I don't think that's good.
All right, I don't think that's good. Sarat and Joe, Steve, I want to come over to you as well. Any thoughts on the regionals versus the money center banks? Do one side of that equation seem more attractive than the other to you?
Well, to me, I'm not in the regionals, and I've looked at them in the past, and it's why stray from what's working, what will work, and what has the ability to navigate tougher economic environments and the tariffs versus the point you made. The regionals don't always have that. And frankly, we also still don't know what the real estate situation is there. Because those, I think we've all been surprised by the lack of an increase in non-performers due to real estate. They don't own a lot of it, but I just think everything in the local community really depends where they're positioned.
Yeah, and I think to that point, the regionals' balance sheets are the ones that I would have concern for going forward. Because if you're getting a cut in rates or a slowdown in economic activity, that's going to affect them in a couple ways. One is, what's the transparency of the balance sheet? Do you have any surprises? And, we saw what happened a couple of years ago when we had a couple of regionals take it to the chin, Silicon Valley, et cetera, First Republic. And then the other one is, if you're thinking about more economic growth and maybe more economic activity, I'd rather play the M&A activity that has not been built into some of the big banks. So that's going to give them a big pop along with the wealth management and the trading revenue. So I think those things will give you the catalyst for improved earnings and multiple expansion as opposed to kind of just
higher margin revenues is what he's saying.
Right. Where do you get the bigger
regionals.
benefit from regulatory relief?
I think M&A activity could pick up. Capital market activity picks up.
We did see a pickup this week with Huntington, and they acquired a bank in Texas.
Yeah.
But you see more of that in terms of more economic activity amongst M&A cross-border. That's where the big banks do really well, and they can use their balance sheets to support that. So I think that the trading revenue, but that will also go to the Schwabs and everything else, right? There'll be a tailwind for all that as well.
So you don't actually have to trade down on the balance sheet quality to go to the regionals because you're going to get the benefit in other places.
Right.
The bulls on regionals will tell you the regulatory relief specifically is going to benefit smaller regionals.
Yeah, we'll have to wait and see. By the way, we're just showing the KRE chart intraday. I believe KRE was higher for part of the day until the report crossed the tape that the president may look to fire Jay Powell. You can see that green right there, and then it takes a bit of a dip. Right now, down about 0.25%. All right, coming up next, and welcome back to the halftime report. We got some committee stocks on the move today, starting with Johnson & Johnson, moving higher after beating Q2 earnings and raising its full-year outlook. Sarat, you own this one. Shares up more than 6% right now.
And I'm not even close to taking a victory lap on this one. This one has not really kept up with the market for the last 3 years. What happened here was 65% of J&J's business is pharma, 35% medtech. Both had organic growth. Both see a better future for the next couple of years. The dividend is very safe. It's a solid balance sheet. I think when you're going to play in this area, which is very under-owned and also hasn't done well, this is one of the premier players.
I love that, under-owned, because that's exactly what the scenario is when you think about positioning and sentiment for healthcare. And there are winners in the healthcare space. We have Viva Systems, we have Cencora, Boston Scientific, all working well. Eli Lilly looks like it's beginning to build some positive momentum again. Amgen working well, AbbVie working well, Insulet, which is PODD. So there are places that you can go in the healthcare sector that have been underappreciated so far year to date.
Yeah, I hate to bring this back full circle, but what about tariffs? The president floating tariffs as high as 200%. Johnson & Johnson and most other pharmaceutical companies.
I didn't say Merck, I didn't say Pfizer, did I?
Okay, fair enough. Yeah. So, Rod, your view on the tariff threat when it comes to Johnson & Johnson?
Yeah, look, I think it's there, but the stocks reflected it for the last year. You got a bump today because, again, you probably had people on the other side of this because they do have new drugs coming on. But I think that this is under-owned, the sector, especially when the administration came in. The clarity, the transparency wasn't there. So Joe's right. There's opportunity here, and if you're a patient investor, I think you can make money here.
All right, J&J up over 6% right now. I also want to look at some crypto stocks under pressure after several major cryptocurrency-related bills. They stalled in the House yesterday. Weiss, you own the iShares Bitcoin Trust, the IBIT. Taking a look at that. Actually, we're looking at Circle right now. Circle shares up over 14%. The IBIT up about 2.33% right now.
Look, follow the path, right? And Trump said that he's got the votes and it'll pass. And when he said that, you've had to believe him. So I continue to believe that crypto is going to do well for momentum, from scarcity, and eventually they'll find a use case for it.
Yeah, clearly Circle moving higher, big stablecoin player on the idea that the president does have the votes to get it through. All right, I want to move on to the spirits and beverage space. Diageo CEO Deborah Crew is stepping down. Sarat, you own this name.
Yeah, and this one's been terrible. I mean, since she was CEO, the stock's down 40%. Diageo is a great selection of brands. I mean, from Guinness to Johnny Walker. Execution hasn't been there. They really did well during COVID because, as we know, everybody kind of sat at home and had drinks. But premiumization has kind of been taken out of favor, and also the tariff issue. So you've got a combination of all those going on, a new management team coming in. I could see value in spinning off some of their groups and actually seeing more value there. The stock is cheap, but it's cheap for a reason.
Yeah, a number of really well-known brands. You mentioned some of them, Captain Morgan, Casamigos, another popular brand there, Bullet Bourbon, so a bunch of names there for Diageo. We'll also move on to the EV space. Tesla losing another top executive. This time is Troy Jones in the wake of Elon Musk's full-time return. Joe, you own Tesla. Shares of Tesla up just about 3.33% right now.
We do, and at the end of the month, we will rebalance and reconstitute and see what we do with the position in Tesla. There's no question the fundamentals of this company are challenged. Revenue growth continues to decelerate. It seems as though Elon Musk has a little bit more of a focus on the company, introducing new vehicles in China and India. But more than anything else, I think what's unfolded here is you've just had a technical bounce off of the July 4th weekend. We came in that Monday morning, the stock was lower, trading 288. A lot of people thought that was the breakdown. The complete opposite is actually unfolded. You've got a 10% bounce the other way, and I just identify that more as a technical bounce, but it's a very strong one.
Is it concerning that they're losing executives while they're trying to compete in autonomous driving? Waymo has a lead. A lot of people think Xiaomi's Apollo Go has a lead as well.
For sure. I think Waymo technologically does have a significant advantage, or certainly several steps ahead of the others. There's no question that they need to reverse some of the fundamental deterioration for this company. But remember, this stock trades a lot around momentum, and momentum is a powerful force. And I think that's what we are witnessing here over the last 10 days. Bullish momentum driving the stock up 10%, really nothing more than that.
All right, Tesla shares up over 3%. Year to date, still down more than 20%. And welcome back to the halftime report. Let's get to our call today. We teased it. We might as well start here. Palantir upgraded to neutral from underperform at Mizuho. They go on to say, while we continue to worry the shares could suddenly be subject to material multiple reversions at some point over the next few quarters, Palantir's uniqueness demands a great deal of credit. Joe, you own this one.
They went to neutral from underperform.
From underperform, yeah.
Okay.
That's why we started here.
Yeah, the stock is up, I think, 400+% year to date. I have to be careful in this segment because we're 2 weeks away from rebalance
400%,
and reconstitution. we're very close. In the last year, we're up 400%.
Okay, last
year we're up 400%. I'm close to the rebalance and reconstitution, so I got to be a little bit careful the way I frame all of this. But for sure, you are talking about a name that has remarkable, strong momentum behind it. And when you have that significant momentum, you have to expect that you are going to see elevated volatility that potentially leads to a precipitous decline. And you have to have the temperament and fortitude to ride through those moments. And one of the advantages of the strategy that I'm implementing is that it's rules-based. So I don't get in the way of it. We're along this stock $16 from the end of January in 2024. You could do the math on that. If I had discretion over this, I don't know that I would have stayed anchored into the position. So I think most important for the viewers to understand is that the temperament surrounding these high-flying momentum names is critically important, and you have to identify where you're going to say to yourself, the exit door is going to open for me, and where, in fact, you need to ride the patience through what I believe is going to be elevated volatility. We could easily see this stock down 25-30% at some point.
Wait, down 25-30%
25-30% from here over the next 6 months. Easily.
Due to valuation or something?
Easily.
I mean, because the structural setup with the EU spending more in defense, that story just crossed the position.
Valuation's got nothing to do with it. Doesn't trade valuation.
You're identifying all the fundamental tailwinds that, right, we know about the company. But what has happened now is this stock has taken the mantle as arguably the #1 identifiable momentum stock in the market. Okay. And that is really what's fueling the significant 400+ gain over the last 52 weeks. So you have to understand that. You have to understand how momentum trades.
All right, Joe, I'm going to come over to you. Sorry, Steve. I keep calling you Joe. I apologize.
Yeah, please don't.
QXO initiated with a buy at $33 by Citi.
And the story is that they view QXO as uniquely positioned to be able to consolidate the building products industry, and that's what the story is. And Brad Jacobs, who's done this in multiple industries, is doing it again. They're being very, as you saw in the recent potential acquisition, they're being very, very disciplined. So to me, this is another compounder that he's putting up, for others to participate in.
QXO shares essentially flat right now. All right, coming up on halftime, United Airlines, it will report in overtime today. Joe, you own this one in the Joe T.
I think UAL is hoping that we get an earnings report very similar to what Delta delivered last week. It's very clear that you have this bifurcation in terms of what's being delivered in the airlines. A lot of the discount airlines obviously not performing well. Delta United with a distinct advantage, catering to a little bit more of an affluent flyer.
Did we ever clear up the guidance situation? They said there was one set of guidance for this scenario, different set of guidance for this other scenario.
I would think that you'll learn more about that tonight.
Yeah, and I think Delta had that too, by the way. So when the tariffs came into place, even Delta came back and said, "Hey, we're not sure." So that's
United after the bell, up about 0.75% right now. Final trades coming up on halftime. We're back on halftime with final trades. Sarat, you're up first.
I'd stick with J&J. I think you got some momentum behind this. You got positive earnings, and people want to own this under-owned stock.
Weiss.
I'm going with IBIT. I mean, you've got some psychological resistance, and we're going to get through that pretty easily and go past 125.
Joe T.
We're sitting in its living room, but the ICE exchange, trading revenue strong. CME, ICE, I like all of these exchanges.
All right, we're going to leave it there. By the way, markets, they dipped after that report. The president was looking to fire Jay Powell. Now look at this. They're all in the green across the board. Fractional improvement, but in the green. That does it for halftime.
That was Joe Terranova, Steve Weiss, and Sarat on the halftime report earlier today. It is now after the close, and what we're going to do is cover a lot of the stocks that they talked about on that show. That's what we're going to do. We're going to break down those specific stocks and ETFs. Not all of them, because some of those stocks and ETFs might be in my portfolio, in which case only members get to see those. But we will cover about 17 stocks that they talked about. There's Johnson & Johnson, for example, Interactive Brokers. You can see them all. Palantir. We're also going to take a look at the indices. Okay, we're going to look at, guess what? Tesla, Apple. We're going to look at, you're wondering where are the other ones? Well, they might just be in my portfolio, I suppose, right? And then we'll also take a look at one of our members' requests, METC. By the way, I did put out another video earlier today, and it was specific to sectors and ETFs that I typically do, and then country ETFs. I did them all in one video. Where can you find that video? Well, you have to go to X, my Twitter page. There it is. Patreon video. Blue Cloud Trading. How do you find me on Twitter? At Blue Cloud Trader. Okay. And there's the video. It was posted about 3 hours ago. It's about 17 minutes or so. And it is free today. Okay. You do have to log into Patreon on my site, but it is free to see that, and it's free to log in. If you want to get access to additional paid content that I have on there, you could pay the additional, I think it's under $5, cup of coffee for the work that I do, that I bring out to you guys. And I do appreciate all of you who do contribute, and whether it's on Patreon or on this page on YouTube, by hitting the subscribe button, the subscribe plus button. We've got a lot of members that are interested in watching these member-only videos that I post where I go over my entire portfolio. So anyway, you can find that by clicking on one of these videos on the homepage and subscribing, and then hitting the subscribe plus button. It will bring up this little page here, and you become a Blue Cloud Trader or Blue Cloud Legend level member if you want to access those exclusive member-only videos. All right, so let's first get into how the markets did today. And you'll notice that the Dow Jones, although in the morning it was kind of going sideways and it dropped, right? That's when Donald Trump came out and said that he was thinking about firing the Fed chairman once again. And then he changed his mind, or someone else. I think it was someone that came out and said something about that. And then basically it was reversed. Okay. And then we saw a little expansion here. The Dow was up 0.53%. NASDAQ up 0.25%. The S&P 500 up 0.32%. Russell 2000 up 1.01%. So we kind of needed this bullish day today because the last few days weren't so great. Oh yeah, that's right. FinViz now has introduced the crypto map, so we're going to take a look at that as well. But let's take a look at. We're going to start off with the S&P 500 map first, though. And these are the individual stocks within the S&P 500. This is the daily performance that we're going to be looking at. You can see that healthcare stocks were up a lot. Johnson & Johnson up 6.19%, one of the stocks we'll be covering. Eli Lilly was up, AbbVie, Merck. Tesla was up 3.5%. Oracle was up 2.7%. AMD was up 2.87%. Amazon was down, so was Meta. Nvidia just slightly up 0.39%. The energy stocks did not do so well today. Consumer defenses like Walmart, Costco were down. Utilities, some of the utility stocks did not do so well. So let's take a look at that new crypto heat map. There's not that many in here, but you can see that Bitcoin, there's Bitcoin, BTC up 0.98%, Ethereum up 7.45%, XRP, BNB I don't really trade any of these other cryptos. I do have a small position in Ethereum, very small position there, and a little bit in SOL, but the majority of my crypto is in Bitcoin, the more established, okay, place to be if you want to have a little diversification in your portfolio. Makes sense. How's the world looking? World is was up a little bit too. Canada, there's Canada right here, Ireland, UK, mostly in the green. China was in the red mostly. So is Japan. A lot of the Japanese companies didn't do so well today. Anyway, let's also take a look at the exchange traded funds, and you can see that crypto actually did the best today. The dark green colors that you see right there. Yeah, and then XBI. Now, XBI was up 2.22%. What is XBI? That's this biotech ETF. Let's take a look at that real quick. I'm just kind of curious to see where it's at. So it looks pretty bullish here on the daily chart with the Ichimoku. Price is above the Tenkan-sen, right? It's above the Kijun-sen. It's above the cloud. Chiku span, that lagging line right there, which is the closing price, that's above price. So XBI looks great on the daily, but I'm going to assume that the weekly is not quite there yet, and I'm correct about that. So if we look at the weekly chart here, you'll notice it's underneath the Ichimoku cloud, so it's not giving us confirmation that it's something that's investable yet, at least based on my strategy. I'm looking at both weekly and daily time frames before determining whether or not to add a position. All right, so let's get into the index ETFs now, and let's start off with the SPY. Look at that, still holding up. Okay, above that Tenkan-sen, the 9 period looks pretty good. Strong uptrend, still up 0.33% today. The QQQ ETF still looks pretty good, still strong. Dow Jones, okay, that one pulled back a little bit. It was under the Tenkan-sen now for 4 days, sorry, since Friday, July 11th. It got under, but we do have a bullish candle. That's a hammer. After a pullback, it's more than likely that this will move up. Not guaranteed, but this is what what the hammer looks like after a pullback. All right, long wick, small body. That's exactly what we've got right there. Long wick on the bottom, small body. Looks like a hammer. FEZ, another hammer, right on the Kijun-sen. Found some support at the cloud. I think we might see the Euro stocks FEZ pop tomorrow. It's just my intuition. You know, that's what the charts are telling me right here. Now, the directional movement index is not looking that bullish here because you can see the ADX is moving up and the negative DI is above the positive DI. But the fact that we are finding support at the cloud, the top of the cloud, and at the red line, the 26 period, the Kijun-sen, well, that gives me hope that we're going to see a little bounce tomorrow, potentially. No guarantees in the market. Here's another hammer on the Russell 2000. So that's very bullish too, above the 26 period and the 200, that dotted yellow line that you see right there. I've got these highlighted with a little blue flag because they look strong on both the daily and weekly charts, but the Russell on the weekly is not quite there. You'll notice that it's still stuck inside the Ichimoku cloud, which tells us there's indecision between the buyers and the sellers here. These are both reversal candles, folks. And they can be indecision candles, but if you've seen them at the top of a move like you do right here, it's more than likely that there's a lot of indecision. Why? Because the opening price and the closing price are essentially at the same spot, right? That's what that little cross looks like, all right? So, or tells us is this was the low, this was the high, and this is where price opened and closed. And the same thing happened the prior week. So this is a weekly chart you're looking at. So we'll see what happens. Of course, I think August 1st will be the day that we'll get some more clarification about those tariffs, and then we'll know. That's what's going to also determine whether the Russell can either move up or decline as a result. Volatility down 1.27%. Okay. But the directional movement index looks pretty bullish here, which means that there's been a little bit of a move up in these last few days, as you know. Right, you can see from this low here, it has moved up a bit, but it's still under the Tenkan-sen, under the Kijun-sen, under the 200, and under the cloud. And the last time we popped and we saw volatility was back on April 2nd, right here, and you can see what happened. The market dropped. We're not seeing that yet. CNBC stocks. These are the stocks they talked about on the show, the majority of them, not all of them. Let's start off with Johnson & Johnson. Had a big day today, was up 6.19%, high volume. ADX looks good here. I like what I'm seeing. I like it on the daily, and I like it on the weekly. Got above that 200-day moving average too. Here's Bitcoin on the weekly chart, and here it is on the daily. Now, this was Steve Weiss's final trade today, and it was also his final trade back on July 7th. And so, yeah, I mean, this is doing pretty well. You know, he called it right around in this place, right, this spot right here. So it's up 9.76%. Looking pretty good. What about Morgan Stanley? That was down 1.27%. So that dropped, but look what developed, another hammer. So this little candle right here is bullish, all right? It's actually not really a hammer. It's more like, let me see what the name of that candle is again. It's a dragonfly doji. Don't you love those names? They're funny, aren't they? Dragonfly doji. You've got the bullish engulfing, the bullish kicker, the bullish harami, the tweezer bottom. You've got dark cloud cover down here. You've got bearish harami. So many interesting names for these candles, candle patterns. You get single candle patterns, double candle patterns, triple candle patterns, like the three black crows, or the bearish abandoned baby, or the bullish abandoned baby. Okay, interesting. Or the three white soldiers. This one right here. Interesting, right? Funny. The Japanese came up with some funny names to identify the Japanese candlesticks. And if you want to understand how Japanese candlesticks work, maybe, you know, pause your screen right now and look at this. This is the opening, closing price, high, the low. If it's a red candle, the opening price is right here at the top of the body. This is the closing price. This is the low, and this is the high. For those beginners out there, a lot of you guys already know that. IBKR, Interactive Brokers, is above the 59.13 level, which is based on those prior highs back in February of 2025. So that's bullish, looking pretty good. It was down 0.30% overall today. What about Charles Schwab? This one is pulled back a little bit, touched the 89.85, and then, as you can see, bounced right off of that support level. That's very bullish. So we'll see what happens tomorrow. I don't like the fact that the negative DI crossed the positive DI on the directional movement index. That's not a good sign. But when price is above the support levels, you got to give it the benefit of the doubt. Okay. I'll give you an example of what I'm talking about. If you go back in time a little bit, right here, we had a crossover. See that red line crossing above the negative DI? If you go straight up, there's the candle. But what was looming right here was the Kijunsen in the 26 period, and that hammer developed and it moved up. Same thing happened here. Okay. So I think that's what we're getting here as well. XLF, another hammer. So that's pretty bullish. I like it. Palantir looks pretty good. I've held this position multiple times. Have had some nice profitable trades in it in the past. This is a nice setup right here, honestly. I like it. I did not add a position here, but it's a great setup because it broke through that 148.21 level on the daily chart. You can see the positive DI here is above the negative DI. ADX is moving up on the daily. And if you look at the weekly chart, that's a very strong uptrend that we've got here going on. So I like it. I like PLTR. KRE has pulled back a little bit, has developed a doji dragonfly type candle right there. So it's more than likely to pop also tomorrow. The weekly chart is still very strong. Oh, no, it's not. Not as strong as I thought it would be. I take it back. KRE is inside the Ichimoku cloud. It's above the moving averages. It was above in the past. So now it's showing a little bit of weakness. All right. It's showing a little bit of weakness. All right. But remember one key thing, folks, that this candle has not formed 100% yet. We still have tomorrow and Friday. It can just as easily come right back above and then finally close above the cloud like it did prior week and the week before. So let's give it the benefit of the doubt because price did move up today. It was up 0.88%. Here's again the daily chart. KBE, another bullish candle, up 0.65%. Let's look at the weekly on that one. That one is above the cloud still. What about CRCL? That's Circle Internet Group. That one's looking good on the weekly chart. Now it's only been, initial public offering was on June 2025, and it's already moved up quite a bit, this stock. If we look at the opening price down here, it's and we measure it, it's moved up 236.37%. Crazy. It's a huge move. And we've got a nice buy signal right there. Okay, after that pullback, it's popped back above the moving averages. 19.39% today. Problem with this stock is it's so volatile that if it drops, you could have a 20% drop just as easily as you had that 19.39% move up. And the next level of resistance that I would be watching if I were you, if you happen to be holding a position here, is the high of that candle, 298.99. All right, so let's throw that in there real quick. And that's where I'd be looking to see maybe if you see price starting to reverse in this level, maybe a reversal candle, you might want to take your profits. You're about 22% away from that target though. So it's got some potential. This is more of a day trading type stock in my opinion. I mean, if you switch it over to like a 3-minute, notice that, imagine you were day trading this with the Ichimoku today. Here's the 16th, okay, Wednesday. Imagine day trading this on a weekly or on a 5-minute, okay. You wouldn't do so bad trading that, or even a 10-minute. Look at the 10-minute holding, how the Tenkan-sen holds price throughout that whole point, or that whole time right there, and then boom, it closes out. So you can determine what time frame is good for you. You know, the 1 minute's going to be really a little bit more volatile, as you can see here. It's going to, you're going to get a lot more crisscrosses, but look at it. It stayed above the Ichimoku cloud even on the 1 minute all day long today, except for right here where it got under, and that was around 3:16 p.m. So Ichimoku, the indicator that I'm using here, can be used on different time frames. It's really up to you to determine what works for you. Do you have the time to be day trading during the day? Most people don't. You know, they have a typical 9-to-5 job. QXO. QXO is on the daily chart is under the moving averages, as you can see right there. The other thing about it is the faster moving average, the green line has crossed under the slower one, so that's bearish. Okay, so no on QXO right here. It's not the right time to get in. DEO, which is Daigyo PLC ads, consumer defensive sector, wineries and distilleries. It's in a decline. Look at this. Okay, look how long an extended downtrend can be, folks. That's a daily chart we're looking at. Let's switch it to a weekly. All right, from the high up here of 224, it's down to 103. It's dropped 53.99% or so, somewhere around there. Yeah, about 53.7%. So that's a big drop. It's under the 200. It's under the cloud. You already know, if you've been watching this channel, you do not add positions when price is under the cloud. Why? Because it's in an established, embedded, okay, decline. And guess what? The buyers aren't stepping in. That all changes if price can break through the Ichimoku cloud. What is the Ichimoku cloud? Well, it's based on a mathematical formula. I've talked about it many times. Should I get into it right now? Not really. I'm not going to do it today, but check out some of my prior videos. I even have one on Ichimoku, and you can look it up also. Just Google Ichimoku. But look at it. It's in a very, very strong downtrend. And when did this all start to take place? I guess it started taking place right about here. Okay, when price got under the Tenkan-sen and Kijun-sen right there on February 11th of 2022. It's a big decline. All right, so once it got into the cloud, you knew that you should not be adding positions if of course you're using this strategy on the weekly. So anyway, I mean, you go back in time and you see the opposite occurs when you're above the cloud. You can see that over here, price got gapped up above the moving averages, above the 200. It led to a nice move of 43.7% move in 1.2 years. All right. We go back a little further. You can always back test the Ichimoku. All right. I'm not just throwing these numbers around. Here's another point right here where it popped above the Ichimoku cloud, and that led to I mean, if you hypothetically, if you were just holding on to it until it dropped under the cloud again, that would be a 33% move in 3.1 years. Not bad. And when price gets under or starts moving back and forth like it does right here, what you want to do essentially is start to measure that. That turns into a consolidation stage right there, and you might want to wait for it to break through that little consolidation stage, like it did over here with this big candle, and then it took off. But it also happened here. But it's never a good idea generally to add a position if the 200-day moving average that you see right there is right there waiting, like it was here, here, here. And once you got above it, that's what led to that push up. All right, let's continue. MTB on the daily chart. Oh, we got a lot of stuff going on here. Hold on, let me get rid of some of those lines. One moment, folks. Okay, so we're back. And MTB. MTB is M&T Bank Corporation, Bank Regional. These last few days it's dropped. It is finding support, though, at the 26 period, and the 200 is waiting. All right, so don't count it out quite yet. And the negative DI did cross above the positive DI. So in a scenario like this, do I add positions here? No. All right, I want to get confirmation, and we don't have that yet as it's declining. It could certainly drop and break through those levels too, but right now I just hold. PNC Financial Services also dropped for a couple of days under the Tenkan-sen, but it was up 0.93% today. So even though it's a negative candle, it did still gap up. It did drop. It closed within the candle prior, but it was still a higher close than the prior high close. Therefore, it's up 0.93%. BAC, Bank of America, is still dropping, but we've got a bullish candle forming. It's almost like a hammer, but it's not the right time to get in quite yet. We need to see some confirmation. We need to see it break above that Tenkan-sen, essentially. What about UAL? United Airlines is looking nice. Get that bullish hammer. It's still above the Tenkan-sen. How about the weekly chart? Well, weekly is, it's above the Ichimoku cloud, but you'll notice that the Tenkan-sen is still under the Kijun-sen. So the green line under the red line, the 9 under the 26, essentially. So you want that faster moving average above. You also want to see the Chiku span. What is that? That's that white line. That's the closing price in the line form. All right, so if you take that closing price, go back 26 periods, that's where you'll find it. And the idea is to see where that white line is in relation to the candle 26 periods ago. If that white line is under that candle, that's bearish. When it's above, it's bullish. Okay? So, we can backtest this alone. For example, when it got under the candle right here. Okay, you can see under the close of that candle. And if we go 26 periods into the future, let's go 26 periods into the future and see where it ends up being. That's 26 bars right there. Whoops, take that back right there. That little red candle right there is 26 bars. So that's when the Chiku span crossed under. All right. Now what's interesting is, in this case, it still had the support of the cloud, so it wouldn't have made sense to exit the position at this place, and it was still above the 200-day moving average, and it basically started moving straight back up again. So yeah, it's just not in the ideal place to be adding, in my opinion. If we see the Tenkan-sen cross back above, yes. All right, DAL is Delta Airlines. This one's inside the cloud on the weekly, so no there, and on the daily, it's just hovering above the 200. It did break through these prior highs, so we might see something here, but on the weekly chart, it's still relatively bearish, and that's a bearish candle that's forming on the weekly. Okay, now let's take a look at Tesla. Here it is on the weekly, up 3.5%, came back into the cloud, but stalled right at the moving averages. So nothing to do here. There's the daily chart for Tesla, popping its head above the cloud, but again, you don't have confirmation on the weekly. Faster moving averages under the slower one. Chiku span is above price, so that's a bullish sign. And the future cloud, Senko Span A, is under Senko Span B. That's also bearish. Apple. Let's start with a weekly chart under the Ichimoku cloud still. Apple, it was up 0.5%. Here's a daily chart under the Tenkan-sen, holding up above that 208.42 for multiple days. Multiple days here. You can see that right there. All these days, it just keeps coming to it and stalling. So that's a legit spot to watch. All right. It goes back to this low. Okay. Right there. And it's respected. It's a respected level. So let's keep going. Oh yeah, one more, folks. One more. METC, which is Ramaco Resources Inc. Let's start with a weekly chart on this one. This is a member's request. It's had a nice big run recently. So you could see the volume. So one of the things, how can you identify when there's more and more interest coming into a company is by the volume down below. That represents the number of shares. 25.7 million shares this week traded in METC. That's pretty big. Compare that to back over here on June 13th. There were about 4.3 million shares traded that week. So there's a substantial number of more trades taking place here. So that's, and you can see that's what's necessary, right, for price to actually break through. And even with this higher volume, it still took a little bit for price to actually break through that 200-day. There's a yellow dotted line right there. It stalled there. Stalled at the cloud and the 200. Stalled at the cloud and 200. All right, but when it finally basically gapped up into the cloud, got above that 200, and then it's taken off these last few weeks. Now what's happening though is this long wick in the top. Now that is not a bullish sign. Let's take a look at the it is above the Ichimoku cloud though. Chico span is above price, as you can see here. Everything looks pretty bullish on the Ichimoku. The problem on the weekly is you will find some resistance at this level, that high right there, 2270. So let's put that in there, and we'll color it light blue, which represents weekly, a weekly level. Interesting that it came close to that level in the past right there too. So that's a significant level. That 2270 I think needs to be broken on a weekly candle, by the way. So we'd have to wait until Friday. Maybe it will. Maybe tomorrow and Friday price breaks through that level. Let's look at the daily chart. So this is what it looks like on the daily. Now this pattern here is very bearish. This is called a dark cloud cover. Those two candles. Okay. It basically, you get the bullish candle, then what you see is price gap up, and then the sellers take control and they push it down to this level, and it closes within the body of the prior bullish candle. That's a bearish cloud, a dark cloud cover, sorry. And let me show you guys that on the cheat sheet here. It's a double candle pattern. Let's zoom in on it right here. After a move up, you can see that the price gaps up first, but then the sellers push it down, and then it closes within the body of the prior candle, like I mentioned earlier. So it gaps up, closes within the body. So that is bearish. There's a higher likelihood tomorrow, and I can only kind of give you a probability for tomorrow looking at this daily chart, that this thing is going to pull back. And maybe it's going to want to retest the moving averages first, come back down. And maybe once it reaches these levels, it gets a little bit more of a boost. There will be people waiting here to buy. I can tell you that. All right. This has gotten a little bit extended. So sometimes what happens is when it gets a little bit out of, gets out of control and it starts moving straight up like that, people start taking profits. And, because that's a relatively big move. If you measure just from this point right here, where price got above the Tenkan-sen, Kijun-sen, and moved up to that high, that's about a 92.31% move. You can see that right here in this box that populates when I start measuring. Look down in this section here in the lower part. Let me do that one more time. So there's the box popping up. Okay, I'm gonna move it up. Notice at the bottom, See how the percentages are increasing? And the high was right about there, or 95%, 92 to 95%. It's around that range in 9 days, by the way. So what does that tell you? Well, in my opinion, this is more of a day tradable type stock, you know, because it can really go against you. It can go against you pretty quickly. From the opening price here, okay, from that point to that close, that's an 11.6% drop almost in 1 day. So that's what's happening here. Let's look at this on a 5-minute. Here's a 5-minute chart. Oh, actually, let's do a 10-minute. Let's do the 10. Okay, here we are, the 16th. So let me zoom in a little bit. Yeah, so on the 16th, it moved up, and then once it got under the Tenkan here, you can see from that point to that low right there, that's a 9. If we measure it, it's about a 9.06% drop. Okay, so right now on the 5-minute, on the on the 10-minute, it's under the cloud, and it hasn't been under the cloud on the 10-minute chart since that little point right there. If we switch it to a 15-minute chart, the last time it was under the cloud was back here on July 2nd. All right, so it's moved up quite a bit. All right, and folks, that's it for this video. I appreciate you watching. I do want to thank you all for supporting the channel. Don't forget to like, subscribe, and remember to hit the subscribe button on my channel here. And if you want the content that I talked about, you can find it right under there. Just scroll down and you'll find the members only videos. Thanks a lot. Talk to you all later.